In summary, billionaires make their money through a combination of strategic investments, disciplined risk management, and a relentless pursuit of knowledge. They understand that wealth accumulation is a marathon, not a sprint, and they Ever wondered how the ultra-rich really make their money? Spoiler alert, it's not just about luck or a secret formula. It's about mastering financial risk fundamentals. Stay tuned as we dive into the real strategies that billionaires use to build and maintain their fortunes. When we think of billionaires, we often picture lavish lifestyles and unimaginable wealth. But how did they get there? Today, we're exploring the true methods behind their financial success, focusing on one crucial aspect: risk management. Let's uncover the secrets to their wealth and what we can learn from their strategies. First things first, what is risk management? Simply put, it's the process of identifying, assessing, and controlling threats to capital and earnings. For billionaires, mastering this skill is crucial. Effective risk management allows them to take calculated risks that can lead to significant financial gains while minimizing potential losses. For instance, an entrepreneur might assess market demand, potential competitors, and production costs before launching a new product. By understanding these factors, they can make informed decisions that maximize their chances of success while mitigating potential setbacks. Take Warren Buffett, for example. Known as the Oracle of Omaha, Buffett's investment strategies have made him one of the richest men in the world. But it's his meticulous approach to risk management that truly sets him apart. Buffett famously avoids investments he doesn't understand and always has a clear exit strategy. His disciplined approach ensures that even when markets fluctuate, his wealth remains secure. By sticking to what he knows best and having a well-defined plan, Buffett reduces the uncertainty that often leads to financial losses. Insights from Market Wizards by Jack D. Schwager further emphasize the importance of risk management. Schwager highlights the traits of successful traders: discipline, thorough preparation, and persistence. These principles aren't just for trading. They're applicable to any financial endeavor. Finding a methodology that suits your personality and sticking to it, even during tough times, is key to long-term success. For example, a disciplined approach might involve setting strict investment criteria and not deviating from them, even when tempted by seemingly lucrative opportunities. Billionaires often have significant portions of their wealth tied up in the stock market, but they don't just buy and hold. They actively manage their portfolios, constantly analyzing market trends and adjusting their strategies. Risk management in stock investments involves diversifying portfolios, setting stop-loss orders, and staying informed about economic indicators. Diversification spreads risk across various assets, reducing the impact of any single investment's poor performance. Setting stop-loss orders helps protect against severe losses by automatically selling stocks that fall below a certain price. Real estate is another major avenue for wealth accumulation. The key here is understanding market cycles and leveraging opportunities when property values are low. Effective risk management in real estate involves thorough due diligence, understanding local market conditions, and maintaining liquidity to handle unexpected expenses. For example, before purchasing a property, a savvy investor will research neighborhood trends, property values, and potential rental income. This comprehensive analysis helps them make informed decisions that minimize risk and maximize returns. Many billionaires are entrepreneurs who have built successful businesses from the ground up. This path involves significant risk, but those who succeed are adept at managing uncertainties. They do this by creating robust business plans, continuously innovating, and maintaining strong financial controls. Successful entrepreneurs know when to take risks and when to play it safe. For instance, they might invest heavily in research and development when launching a new product, but scale back spending during economic downturns to preserve capital. Currency trading offers another lucrative opportunity, as highlighted in The Little Book of Currency Trading by Kathy Lean. This market is incredibly volatile, but with the right strategies, traders can capitalize on market fluctuations. Risk management here involves staying updated on global economic news, using leverage wisely, and having a clear exit strategy for every trade. For example, a trader might closely follow central bank announcements and economic reports to anticipate currency movements. By understanding these factors, they can make informed trades that capitalize on market trends while minimizing risk. Beyond strategies and markets, the mindset of the billionaire is a crucial factor in their success. Discipline and long-term planning are hallmarks of the ultra-wealthy. They avoid impulsive decisions, focusing instead on calculated risks and consistent growth. For example, rather than chasing short-term gains, they invest in assets with the potential for steady, long-term appreciation. This disciplined approach helps them build and preserve wealth over time. According to The Art of Accelerated Learning by Dane Krauss, continuous learning and adaptability are vital. Billionaires are lifelong learners, constantly seeking new knowledge and ways to improve. This adaptability allows them to pivot when necessary and seize new opportunities as they arise. For instance, they might take courses on emerging technologies, or attend industry conferences to stay ahead of trends and identify new investment opportunities. Billionaires have a unique approach to risk. They understand that with great risk comes the potential for great reward. However, they balance this by ensuring they never risk more than they can afford to lose. Studying the strategies of notable billionaires, we see a common theme: a balanced approach to risk and reward. For example, they might diversify their investments across different asset classes, such as stocks, real estate, and bonds, to spread risk and increase the likelihood of overall success. Financial crises can devastate many, but for savvy investors, they present unique opportunities. Billionaires like George Soros and John Paulson have made fortunes by anticipating market downturns and positioning themselves to profit. They recognize that crises create market inefficiencies that can be exploited. For instance, during the 2008 financial crisis, John Paulson famously bet against the subprime mortgage market, earning billions in the process. By understanding the underlying issues and acting decisively, he was able to capitalize on the downturn. Managing risks during economic downturns requires staying informed and prepared. Successful investors monitor economic indicators closely and adjust their strategies accordingly. They often reduce exposure to high-risk assets and increase liquidity to take advantage of opportunities. For example, during a recession, they might shift their investments from volatile stocks to more stable assets like government bonds or high-quality corporate bonds. This conservative approach helps protect their wealth while positioning them to take advantage of eventual market recoveries. After a crisis, billionaires focus on recovery and growth. They gradually increase their investments, taking advantage of lower asset prices. This long-term view allows them to rebuild and grow their wealth steadily. Patience and strategic planning are key during these periods. For instance, they might slowly reinvest in undervalued stocks or real estate properties, knowing that these assets are likely to appreciate over time as the economy recovers. In summary, billionaires make their money through a combination of strategic investments, disciplined risk management, and a relentless pursuit of knowledge. They understand that wealth accumulation is a marathon, not a sprint, and they meticulously plan for both risks and rewards. By following their example and adopting these principles, you can set yourself on a path to financial success. Whether you're just starting your financial journey or looking to refine your strategies, there's much to learn from the habits and practices of billionaires. Apply these principles, stay disciplined, and remember, wealth isn't built overnight, but with the right approach, you can achieve your financial goals. Don't forget to like, comment, and subscribe for more insights. See you in the next video.